WeBuyCars saw double-digit interim revenue growth driven by higher volumes, high average unit selling prices and improved margins. The vehicle trading platform said ongoing investment and technological advancements have resulted in operational efficiencies and margin improvements. CEO Faan van der Walt joins us now to look into that performance. Thank you so much for your time, Faan. Just lay the table on the level of growth that WeBuyCars saw in this reporting period.
Hi, Zanati, and thanks for having me. Yes, we're very pleased to report on a period where we once again experienced good growth. This is the story of WeBuyCars, and we're extremely grateful for that. It seems like our business model is well accepted in the market, and we've grown in market share over the years, and this period has not been any different, albeit that there are always challenges in the market and a change that you have to navigate through. In recent months, the consumer was definitely under pressure, with less spendable income. But our business model is such that, we are agile, we can adapt. And I think part of the success we have experienced over this period was due to the fact that we could be deliberate in what we buy and what we offer our clients.
Yeah. We talk about the consumer still being in a very, very difficult financial position. Then talk to me about the room that you had for margin expansion and elevation of selling prices.
Yeah, look, the market is certainly under pressure, and we've seen dynamics change within the market, with various manufacturing experiencing difficult times, especially in the higher end luxury brands, whilst the incumbents like Asian manufacturers and Chinese manufacturers, have really been very aggressive and successful, which confuses the consumer because you don't know what to buy anymore. Are you buying a Chinese car, or are you buying a traditional VW Polo, for instance? That makes it quite interesting, and there isn't a right or wrong answer there. There's many things to consider when purchasing a vehicle. The market has certainly been under pressure. New vehicle sales is fairly steady, but we can definitely see a growing car park, as there used to be only 10 million vehicles on South African roads, and nowadays it's north of 11 million vehicles. So the pool is being replenished by new vehicles coming into the market, and obviously certain vehicles are being written off or are just too old to be in use anymore, so they fall away, but the pool is growing, albeit slowly.
Yeah, and talking about this kind of environment as well, we know that a lot of people then will tend to find solace and safety and opportunity in credit. And I know that WeBuyCars offers vehicle finance in partnership with some of the lenders. But how open are the vehicle finance taps in this consumer environment?
Look, it's difficult. So we have seen some resistance from most banks because they have to lend responsibly. Therefore, we've seen a higher rate of decline than what we were used to, let's say, a year or two ago. But that being said, we have developed technology to really fast-track finance applications and to give consumers an answer on a finance application far quicker, because we are now fully integrated with the banks, and we offer various financing solutions, not only through traditional banks, but also in partnership with the likes of Capitec, that offers unsecured lending for the purpose of buying a used vehicle.
Okay. You talk about that investment in technology, of course, that has bore a lot of fruit for the company. What's the runway of investment when it does come to that technology prioritization?
Well, for us, the efforts that we have put into developing our own systems are just starting to bear fruit now. The fact that we are not reliant on any third parties for technology platforms gives us a competitive advantage. And with the huge data sets we have, with the amount of leads we get, with all the sales and buying data, it allows us to experiment and find ways to offer better service to clients, because we are operating in a very low margin, high turnover environment. And if you get things right, it works in your favor. But if you don't get it right, it can easily be detrimental to you.
Faan, just as we close off the conversation, of course, now you are in the second half of the financial year. Any risks and opportunities that you are looking at this point, and maybe some opportunities that you could find from some of the risks that are negatively impacting some of the companies out there?
Yeah, look, I think we've always taken a very conservative approach when it comes to managing our business. We never bet the farm. So we are very conservatively geared, which, especially in times like these, with fairly high interest rates and lower consumer confidence, can impact a business that's highly geared very negatively. And we've seen that in the market, where certain manufacturers are leaving the country, and other used car dealerships are going through a very difficult time because they are highly geared. With us, we're very conservatively geared, and that serves us well. So not a risk for us, but rather an opportunity to expand. So we'll be opening throughout the rest of this calendar year 3 more big branches, one in Cape Town that can house 1,200 cars, one in Gauteng, Pretoria North, in Montana, also north of 1,200 vehicles. And then towards the south of Gauteng, in Vereniging van der Bijl, we'll also be opening a branch there towards August. So lots of exciting things happening here, but not only with the physical expansion, also technology-wise. People who visit our website regularly will be able to notice lots of little nuanced differences from time to time, and that's just in an effort to improve the customer experience.
Well, and your latest advert got me wanting to buy a new Jeep, as I want to rev a few Jeeps. Thank you so much for your time and for the insights on those results of Faan. That was Faan van der Walt, CEO of WeBuyCars.